Hello and welcome. Thank you for joining us today for the launch of the 2026 edition of the IEA's Global EV Outlook. I am Julia Horowitz from the IEA's communications team. Our Global EV Outlook is an annual publication that takes a deep look at recent developments in electric mobility across the globe. Combining analysis of historical data with projections, the report examines key topics such as the deployment of electric vehicles and charging infrastructure, battery demand, and policy developments in established and emerging EV markets. This edition also includes early monthly data for 2026 and considers the potential implications of the ongoing energy crisis for EV policy and market development. For today's event, I'm joined by IEA Chief Energy Technology Officer Timur Gul, who will deliver some opening remarks. Then Araceli Fernandez and Elizabeth Connolly will walk us through some of the report's key findings. We'll finish by taking questions from the audience. For those participating in the webinar, we invite you to send your questions via the Q&A function in the Zoom at any point during the presentation. We'll also take a 2-minute break at the end of the presentation if you want to send your questions in then. And with that, I will pass over to Timur.
Thank you very much for the kind introduction, and also very warm welcome from my end to this launch webinar of the 2026 edition of the Global Electric Vehicle Outlook, which is, as we already just heard, the IEA's annual reference report when it comes to electric vehicles. It's been published for more than a decade, tracking progress for electric mobility across all transport modes, as well as analyzing the prospects of EV markets and technologies moving forward. This year's edition is, of course, released amid the energy crisis that is resulting from the conflict in the Middle East, the disruption of oil flows through the Strait of Hormuz. And so I'm sure there's a lot of interest in this year's edition. We, as the IEA, have been working to support governments around the world with supply and demand side measures to deal with the immediate impacts of the crisis. But moving forward, it is quite possible that policymakers will look for structural opportunities to enhance energy security and shield consumers and economies against the impacts of such or similar crises. On the demand side, it is quite possible and, if I may say so, rather likely that one focus again of policy measures will be on road transport, simply because it is the largest consumer of oil today. The past evidence here is also quite clear. Policy responses have already focused on road transport in past crises. Think of the oil crisis in the 1970s, for example, which prompted the introduction of fuel efficiency standards that have since resulted in the doubling of fuel economy of vehicles. And of course, technology developments over the past decades mean that policymakers have more tools at their disposal to reduce oil use in transport. Many governments in oil importing countries in particular will perhaps turn to identifies ways for scaling up electric vehicles. In fact, what we are seeing already today in some countries in Southeast Asia, which is of course a region that is particularly affected by the current energy crisis, what we are seeing here is that they have already announced plans to expand or extend EV tax incentives as part of their energy crisis responses. And it is quite possible that others may look into that as well. For consumers, there's of course also appeal in electric cars. The increasing affordability make them an ever more attractive option when considering purchase decisions. In China, the world's largest oil importer today, 7 out of 10 electric cars sold last year were actually cheaper at their sticker price to purchase than their conventional ICE, internal combustion engine counterparts. In Europe, what we have seen is that prices dropped last year in the context of tighter fuel economy regulations, and the current high oil price environment, of course, further boosts the fuel cost savings for those drivers that already have an electric car at their disposal, and in particular for corporate fleets which drive long mileages every year. What our report finds is that the car market, electric car market today is truly global. Last year, 1/4 of all new cars sold was actually electric, in line with the forecast that we had in the Global EV Outlook 2025. And our forecast for this year, for 2026, is for electric car markets, for electric cars, to reach 28% share of total car sales by the end of the year. With existing policies, we actually find that they are pointing to a longer-term share of electric vehicles in global car markets of around 50% by 2035, so within the next 10 years. The start to this year, to 2026, in global car markets and in global electric car markets was somewhat bumpy, as sales declined in China and the United States due to policy changes that we saw in both countries. But what this masks is just how important the market uptake of electric vehicles was last year and is already today. More than 100 countries recorded electric car sales growth in 2025, and in around 1/3 of these 100 countries, electric cars made up for at least 10% of new car sales. There is, according to our assessment, significant upside potential for EV sales if additional supportive policies are implemented. Upside potential this year, but in particular over the mid and longer term as these policies take effect. Of course, these developments in global electric car markets don't come without headaches for policymakers. The major change that is taking place in the global car industry as a result has implications that go far beyond energy alone. China's outsized role in global EV supply chain is an important economic security consideration in many countries and a challenge for many international renowned car makers. The development that we're seeing in global car markets is actually truly staggering. China surpassed the European Union to become the world's largest car exporter already in 2024, as car production in the country basically doubled over the past 2 decades. 2 years ago, in 2024, when China overtook the European Union in terms of car exports, electric cars made up for just 20% of these car exports from China. That share rose to more than 35% in 2025 and reached 50% of total car exports as recently as April 2026. Chinese imports now account for over half of electric car sales in countries outside Europe and the United States. The effect for the markets that have been importing these electric cars is actually very strong. These imports of cheap electric cars from China have brought down prices and driven up EV sales in many emerging and developing markets in recent years in particular. Think of Southeast Asia here, for example, where electric car sales have seen spectacular growth, and my colleagues will talk about that in a minute. Spectacular growth over the last 2-3 years, reaching a sales share of nearly 20% last year. More than half of these sales were supplied by Chinese car makers and 1/3 by manufacturers in the region, mainly one particular one from Vietnam. By comparison, around 2/3 of all conventional car sales in the region are actually from international automakers. As a final point, it is important to underscore that all signs that we get from the battery industry point to further growth. Battery technology innovation continues to be very strong. Almost half of all energy patents that are today are related to batteries. No other energy technology has ever commanded such a high share in global energy patents. This development on the innovation side and the falling cost have tangible impacts on the opportunities for batteries in the energy sector, in road transport, the power sector, and beyond. For electric cars, these recent technology developments allow for ever shorter charging times, and the advances on battery technology and the falling prices are starting to spread electrification in road transport beyond cars towards heavy trucks, an area that has been long thought of as hard to abate. As our analysis in the Global EV Outlook already last year in 2025 pointed out, electric cars are now competitive with diesel trucks in China on the basis of total cost of ownership, and this is now also registering in sales. In 2025, 1 in 4 trucks sold in China was actually electric, a rapidly growing market that doubled twice within just 2 years. Globally, this is also registering as a result. Electric trucks now make up for 9% of all truck sales. So a lot of things happening in global EV markets, and a lot to digest from this year's edition of the Global EV Report. And so I'm very pleased to pass on the word to my colleague Araceli Fernandez-Pales, who heads our Technology Innovation Unit and has overseen this report, and my colleague Elizabeth Connelly, who is lead transport analyst in the team, project coordinator, and the lead author of this particular report. Over to you, Araceli.
Thanks very much, Timo, for the great introduction. A warm welcome as well from my side to this launch of the 2026 edition of our Global EV Outlook. I'd like to start diving into the key insights, and if I may, I would like to start by providing a bit of the historical shift that we are really seeing in global car markets. When we look back, the sales of internal combustion engine cars peaked in 2017, and we don't see a sign of a return. Actually, what we see is that the recovery of the global car market since the pandemic has been exclusively driven by sales of hybrid and electric cars. Just in 2025, last year, we saw electric car sales increasing by 20%, exceeding 20 million of sales and reaching a 1 in 4 share, as Timur mentioned. Of course, there's many uncertainties around global car markets at the moment, particularly if one considers for example, economic implications of the conflict in the Middle East, which could be putting on hold some of the purchase decisions from some consumers that are considering to buying a vehicle, buying a car at the moment. But that's affecting, in a way, global car markets. When we look at prospective consumers that may be looking into buying an electric vehicle, here what we see is that, of course, the current high oil price environment we are in is really bringing to the spotlight the benefits of driving an electric vehicle. At the same time, we also see that the current energy crisis is also making policymakers increase their attention in the area of reducing oil imports. And that's an important consideration for the road sector because, as Timur mentioned, that sector represents more than half of the global oil demand today. And this is an important energy security consideration when we look at some of the responses that we saw from governments in previous crises. When we look back at the 1970s crisis there, as it was mentioned as well, governments were introducing fuel economy standards have resulted in halving the energy consumption in the road sector since then. Also during the COVID-19 pandemic crisis, we saw governments introducing or reinforcing EV subsidies as well to strengthen their uptake, to also strengthen the economic recovery. So all in all, we see that therefore, of course, there is an upside potential to our 2020 forecast for electric car sales, in which, as Timur mentioned, we see electric car sales being poised to increase their growth, reaching a 28% market share for the whole of the year. But of course, this upside potential will take some time to register in the market. First, because of course there's a time lag between the time when a vehicle, a car, is ordered and the moment where it really hits the road, but also because it would depend really on whether and at which pace governments may put different policy responses in place as well. And when we look forward, of course, it would be important to consider that the full ramifications of this energy crisis, be it on the economic side, be it on the policy responses, would be really shaping global car markets and the uptake of EVs for years to come. Actually, just with the policies that we have at hand today, or that have been announced or put forward formally, at this moment in time, what we see is that the share of electric car markets could be projected to grow to reach half, or around half, by 2035, so in 10 years to come. Now, it's important as well to consider that when we look at the outlook for electric vehicles, it's also important to take a little bit stock of how extraordinary the growth has been over the last few years. Just in the span of 5 years, we saw how the share of electric cars has really increased by almost 6-fold, reaching this 1 in 4 that we saw last year. And there are very interesting regional trends, of course, that have been driven this global growth. If we just see, for example, in 2025, how sales of electric cars in Europe increased by 30%, in response to a step change in the CO2 standards and the fuel standards that we saw in the region for cars. China was once again the largest EV market, absorbing half of the global sales of electric cars that we saw in that year, even though the growth slowed slightly, partly because of its halt in the trading scheme in that region. And we have really been seeing very strong growth in emerging markets, particularly Southeast Asia and Latin America, as Timur mentioned as well. All in all, what we saw is that more than 100 countries recorded electric car sales growth in 2025, last year. And in around 30% of those countries, we saw the share of the electric car market really reaching more than 10%. So quite important dynamics in there. Moving forward for this year, what we have seen is that there's been a very strong performance in electric car sales in the first quarter of the year. Particularly, this was the case in Europe, where we saw very strong, again, sales, and we expect to see the largest growth as well within major markets, reaching a market share of around a third for the whole of the year. In emerging markets, again, quarterly sales in this first period of the year were performing very strongly. It was mentioned, for example, how in Asia-Pacific countries outside China, we saw an 80% year-on-year growth. So really important figures there. And for example, in China, what we saw was a bit of a different dynamic where electric car sales in the first quarter were slowing, but at the same time, we saw then that they were really recovering in April, which makes us find those sales to get growing in the rest of this year to reach a market share of almost 60% for the whole of 2026. Now, of course, moving forward, again, looking at the outlook, again here, affordability and policy dynamics will really shaping the uptake of EVs. What we see is that for example, just in China, as also Timur mentioned, last year, more than 70% of the battery electric cars that were sold in the country were sold at a cheaper sticker price compared to the conventional internal combustion engine car. And that's really leading to the share of the electric car market in China to exceed 90% by 2035 in our outlook when we look at the next 10 years ahead. In the case, for example, of Europe, we see that the automotive package that has been proposed has cast some doubts around the uptake of electric vehicles. But we have seen at the same time how OEMs have really been adjusting their energy price strategies. They have been also bringing more affordable electric car models to the market in 2025 in response to tighter standards as well during that year, which makes us really see that there is expected, further moves in that direction, and for which we see that the share of the electric car market in the European Union could reach more than 90% by 2035, taking again a stricter interpretation of that automotive package set of rules. For emerging markets and developing economies, we again see strong performance moving forward. For Latin America and Southeast Asia, for example, we expect up to a tripling of the share of the electric car market by 2035. Now, let me spend a bit of time in Southeast Asia, because this is really a region that, first of all, has been mostly affected by the current energy crisis. And at the same time, it's where we have really been seeing very strong growth in electric car sales. If we just look 2 years back, what we saw is that the sales of electric cars on a quarterly basis were stagnated around between 40 and 50,000 cars. From the mid of 2024, these quarterly sales really started to take off, and they almost increased by fourfold, reaching around 200,000 electric cars being sold in the last quarter of 2025. Now, for the whole of 2025, what we've seen is a doubling of these electric car sales in the region, reaching a market share of almost 20%, as Timur mentioned as well, with a growth here led by sales in Vietnam, in Thailand, and Indonesia. For this year, again, sales have been really strong with an 80% year-on-year growth in the first quarter. So again, that's a very important dynamic. And what we are seeing actually in this region is that some countries are putting in place either extensions or expansions of their EV tax incentives, just to make sure that this is also part of their policy response to the energy crisis at the moment. Now, the reason why we've seen this extraordinary growth of electric car sales in this region, particularly, is hinging in a way, is relying on the affordability of these vehicles. And this is really based on two main pillars. On one hand, imports from affordable Chinese electric cars. On the other hand, because of a sizable home-ground electric vehicle manufacturing capacity as well. We see, for example, that Vietnam really hosts a sizable homegrown electric car manufacturer, which is called VinFast. This is a company that is offering already electric car at prices that are really on par with those from conventional cars today in the market. But in other countries in that Southeast Asian region, what we see is actually that there's been an increase in the import of affordable electric cars coming from China. If we look at, for example, Thailand, here what we saw is that for the last 2 years, we have seen again that the prices of electric cars have been similar to those from internal combustion engine cars, but that's again through a period where the imports of electric cars in overall sales from China have really been at a share between 75 and 85%, so quite sizable shares here. If we look at Indonesia, for example, in this case, what we've seen is that there's been progress in terms of the reduction of the cost premium of electric cars versus conventional cars, with a reduction from 50% of that premium in 2024 to 40% in 2025, just last year, again because of an increase of these affordable imports of electric cars from China. Now, it's important as well to consider that some of these countries are considering and thinking about tightening import rules with a view to also develop domestically manufacturing capacity for electric cars as well. Now, it's important as well to take a little bit stock about this China's outsized role in global car markets. That's, cannot be really overstated. We saw how already in 2024, China overtook the European Union as the largest exporter of cars. We have seen as well how China is far and away the largest electric car manufacturer, with around 75% of the global electric car production last year. That has, of course, global implications. When we think about that, the domestic competition in China is increasing. This is really squeezing and putting more pressure on manufacturers to really squeeze their profit margins, and this is making them increasingly looking at overseas for export opportunities. We have seen how exports of electric cars from China have doubled last year, exceeding 2 million. And some of these exports may be facing some headwinds moving forward, as we are seeing that inventories of electric cars are building up. For example, we are estimating that at the moment, taking into account already the first quarter of this year, those inventories could be in the level of magnitude for around 700,000 electric cars. But there is a very clear trend here, and is that Chinese electric car exports are increasing. This is so much that, for example, we saw that the share of electric cars in overall exports from China were really reaching 35% last year, and that share has really increased to 50% just in the month of April this year. Now, there's different, of course, target markets for exports from China. If you see in the slides, those are mainly Europe and other Asian countries. Those account for around 3/4 of all the electric car exports from China. But it's also important to consider that China is the main supplier of EVs in some markets. For example, when we look outside Europe and outside the United States, imports of electric cars from China represent more than half of the overall electric car sales in those countries. It's also important to note that Europe is a main as well exporter of electric cars here. Their exports increased by 25% last year, mostly within Europe, so from the European Union to other European countries, being Turkey, being Norway, being the United Kingdom. But all in all, it's also important to acknowledge that the region, Europe as a whole, was importing more electric cars than exporting, so has a net importing nature, and around 70% of those electric car imports were coming from China. So with those insights, I will leave it here and hand it over to my colleague Elizabeth. She's going to be talking more about how China reached that leading role and some of the technology trends as well that we are seeing in the sector. Thank you very much.
Great. Thanks, Araceli. Sure. So I think China's edge in electric mobility is not a coincidence. It builds on decades of policy related to building a market, to building an industry, and to pushing innovation. And this impact has been significant, especially when it comes to EV batteries. So let me start by giving two illustrations of what has happened in China. The first is related to electric vehicle battery prices, which is, of course, a key determinant in the cost-competitive manufacturing of electric vehicles. Today, the price of batteries in China is lower than in any other part of the world, but this wasn't always the case. So looking back about 8 years ago, you can see that the price of batteries in China and the US were similar, approximately equal, and as was their experience with EV battery manufacturing. And Europe was already kind of slightly behind there. Back then, China was home to kind of relatively smaller manufacturers and facilities and was not yet at the technological frontier that it is today. Meanwhile, the Panasonic and Tesla partnership in the United States was really pushing the boundaries of what's possible in terms of cell densities as well as economies of scale with the construction of the first gigawatt factory. Since then, though, we've seen that the pathways have begun to diverge as EV battery manufacturing in China scaled on the back of growing domestic demand. In 2025, you can see that now China has produced cumulatively 8 times as many EV batteries as the United States. And the result is that the average price of batteries in China is about 30% lower than in the United States. And then compared to Europe, China has has more than 10 times the battery manufacturing capacity of Europe today. But beyond benefiting from economies of scale, China has also invested heavily in technology innovation, and China is a leader in lithium-ion battery patents. And this is a technology that is attracting a lot of attention from innovators, in fact, more so than any other energy technology has ever before. And you can see that in the fact that lithium-ion batteries represent almost half of energy-related patents today. And what we've also seen is that China has become a world leader in so-called LFP batteries, which are cheaper and less mineral-intensive options than other commercial lithium-ion batteries. And the result of China's innovation push is very far-ranging. So one of the key impacts of this innovation is on the charging speed of EV batteries. And so these are getting faster and faster, in part because of new power electronic materials, battery cell technologies, and battery pack architectures that are enabling more efficient, higher voltage, and thus faster recharging systems. If you look back in 2020, the maximum charging power of any electric vehicle model was 250 kilowatts, which meant that it took around 25 minutes to fully recharge the EV. And it was only in 2022 that EV models were made available that could charge at 500 kilowatts, so getting to about 15-minute recharging time. But it's important to keep in mind that model introduced in 2022 was really an expensive luxury model that had fairly limited sales worldwide. And so that's why 2025 is kind of a remarkable year in which the Chinese company BYD introduced the first ever EVs with 1,000 volt batteries that are able to charge at megawatt speed, meaning they can fully recharge in less than 10 minutes. And what we've seen into this year in 2026 is more announcements of charging times in under 10 minutes. And this is as we're seeing a competition mostly among Chinese manufacturers really intensifying in this ultra fast charging sector. But globally, we are seeing deployment of ultra-fast chargers accelerating, though today it's important to realize that only 5% of battery electric cars on the road can use a charger with a power rating of greater than 250 kilowatts. But nonetheless, sales of ultra-fast charging vehicles are growing rapidly, and this is really driving innovation and competition in the sector. Battery innovation isn't only helping charging times for cars, but it's also enabling wider electrification, in particular towards the heavy-duty truck segment. And this is where we're seeing declining battery costs further improve the already existing operational cost advantages of electric trucks. And at the same time, we're also seeing the deployment of suitable charging infrastructure for trucks growing worldwide. And in 2025, electric truck sales more than doubled to reach 9% of all truck sales. The vast majority of these sales come from China, representing more than 90% of global electric truck sales. But we did see electric truck sales in Europe and North America also grow, though they reach lower volumes. I think it's important to keep in mind, too, that electric trucks still cost between 2 and 3 times more than a diesel truck at the point of purchase. But as we pointed out last year in our report, in China, there's already this total cost of ownership competitiveness that's been reached between electric trucks and diesel trucks, and this is having big implications in the Chinese market. So we've seen the growth in the Chinese market kind of explode in recent years, with the share of electric trucks roughly doubling every year since 2023, to the point that in 2025, 1 in 4 trucks sold in China was electric, and nearly all of them were battery electric trucks. Just as China's electric car industry has kind of developed out of the battery industry, we're seeing this new electric truck industry developing also out of the machinery and heavy industry sector. In 2025, almost 30% of Chinese electric trucks were produced by these new market entrants in this sector, and those companies don't even have conventional vehicles in the lineup. This is an important trend to watch for global oil markets, considering that trucks are the second largest source of road transport oil demand following cars. And what we see in our outlook is that electric truck sales could reach 60% in China in 2035 on the basis of existing and announced policies. And this is actually more conservative than what some of the current domestic market actors are looking at. So the chairman of the battery maker CATL, which provides more than 80% of China's electric truck batteries, has actually suggested that half of Chinese electric truck sales could be electric as early as 2028. Our outlook expects that these developments will also be reflected in other markets. For example, in Europe, we expect the total cost of ownership of battery electric trucks to reach parity with diesel trucks by 2030. And so all in all, globally, we expect 1 in 5 trucks sold in 2035 to be electric on the basis of existing policies. Battery innovation and cost reductions are therefore set to reshape the global vehicle manufacturing industry in the years to come. But there are also wider technological developments that are in the automotive industry that are reshaping vehicle design, and many of these are further improving the case for electric vehicles in the market. And they come from software and AI-related developments. Following the lead of pure-play EV makers, most automakers today are developing vehicles with more centralized software systems that allow key functions and systems to be updated remotely or over the air, and this can speed up development time and rollout of new features for vehicles. Today, all currently available models with this new zonal architecture and extensive over-the-air update capabilities are battery electric, and they're primarily from pure-play EV manufacturers. And this reflects both the lower mechanical complexity of battery electric vehicles, as well as the fact that these pure play EV makers tend to operate more like software companies in some cases than conventional car makers. Some of the main software-heavy features of today's cars are dedicated to driving aspects of automation. So this can range from automated steering and speed control to kind of autonomous driving in certain conditions. And I think today the kind of poster child for autonomous vehicles is the robo-taxi, which is operating commercially in over 20 cities. These are mainly in China and the United States, which is where the associated technology companies are headquartered, but we're seeing commercial operations expanding in other countries as well. And I think it's worth noting that with these robo-taxis in commercial operation, today all of them are battery electric vehicles. And more generally across the car market, EVs tend to be more likely to feature this combined control of steering and speed control than any other cars. Advances in driving automation are underpinned by the fast-paced developments in computing power and artificial intelligence. But apart from automation, AI also offers additional benefits for electric vehicles when it comes to things like battery management systems and more optimal EV charging. AI-enhanced EV charging systems, alongside technology developments in bidirectional charging, mean that EVs have the opportunity to become an actor in the power grids and can offer substantial demand flexibility as well as providing grid services. So again, this really makes EVs more of an asset for energy storage rather than just loads on the grid. And this is important because it can also mean that EVs can help reduce the otherwise required grid investments that would be needed in the future. And so with that, I'll hand it back over and we can have time for questions. Thank you.
Thank you very much for the presentation. As Elizabeth said, we now have some time for questions. If you haven't already, we invite you to send those in via the Q&A function on the Zoom. And I should add, it would be great if you could include the organization that you're affiliated with. And with that, we'll take a 2-minute break. We'll be right back. Thank you all for sending these questions in. We have a bunch of great questions to get through today. One thing I did want to note, we had one question about whether there is 2030 data, and I wanted to just note that that is included in the report, which is available freely to download on our website. Then I wanted to start with you, Timur. We had a bunch of questions, unsurprisingly, about the effects of the current energy crisis and what that could mean for EV sales. I was wondering if you could talk a little bit about that and perhaps share some data on specific markets. We had one question about Australia and New Zealand in particular.
Yeah, thank you. And it's great questions. And I also saw that some colleagues are asking for the slides, so we will upload them absolutely afterwards. I know they're very good, thanks to all the great work that the colleagues have done. The crisis is, of course, on everyone's mind, and how this is registering or not in sales, how it might affect sales moving forward. And I think the long and the short of the answer is that it's currently very difficult to assess what will be the impact of the crisis on global EV markets. I think what it has certainly done, it has brought the economic benefit of driving an EV onto the minds of many of the consumers, businesses around the world. You just, thanks to the higher efficiency of an electric car, you just gain on fuel costs, or your fuel cost savings are quite high, and our estimate is for European Union, for example, that the fuel cost savings in April were just 35% higher if you already had an EV. That is for an average consumer, and if you're driving a corporate fleet which has longer mileages, then the fuel cost savings in absolute terms will be even larger. So this is something that I'm sure many people listening to us are already experiencing themselves, that people who have friends or colleagues who have an EV talk about those cost savings, and surely will also increase the appeal of electric vehicles moving forward for consumers. There is something, and there was a very specific question, as you said, on EV trends in Australia and New Zealand. There is certainly some early signs. I mean, it's markets where Australia and New Zealand were the gasoline price hikes that we have seen in response to the crisis were particularly large. over the month of March, April, and we did register significantly higher electric car sales in both countries. Australia 180% up, New Zealand 195% up in April year on year. Well, this is not an insignificant number, of course, from a different basis here, but it's significant to note, and I think we can only speculate if this was as a response to the crisis, but the correlation seems quite strong here. We also see, for example, in countries like Vietnam, where electric car, as Araceli already explained in her presentation, that electric cars have reached price parity with conventional cars. We see that electric car sales were up 90% in April. So there are reactions. We also seen that exports from China doubled year on year in this first quarter, even if all these exports haven't registered in sales yet, but it's very much noteworthy. We're seeing that second-hand markets are improving, in particular in the European Union, where sales in second-hand markets have been up significantly year on year. We are also seeing for 2 3-wheelers, in particular Southeast Asia, strong growth in the first quarter in Southeast Asia. So a very strong growth that is taking place in countries in particular which are through prices or through shortages more affected than other regions. But I think the longer term impacts will take time until we understand really what's happening, how consumers are really taking into account the fuel cost savings, that the benefits they get on that front from driving an electric car, and how policy is responding to the crisis. That ultimately will determine just how significant the impact on electric car markets will be.
Thanks very much, Timur. Araceli, I would love to go to you now with a question that we received on trends in Europe. The question is from a colleague at the European Automobile Manufacturers Association. They said, you mentioned that you forecast 90% of sales in the EU will be EVs in 2035. Can you please explain the reasoning and assumptions behind this figure? Araceli.
Sure, thanks a lot, Julia. And yeah, that's a very important point, actually, because of the changes we've seen in regulation, of course. Perhaps just to take a little bit of a step back, first of all, because we didn't spend a lot of time in the presentation, but we wanted to also highlight that in the report, we explore 2 main scenarios that are exploratory. One that looks at what is called current policy scenario, that really looks at policies that are enacted as of today, as of the time of writing. And the second one is the stated policy scenario, in which we look as well beyond those enacted policies to those that have been put forward formally, even if not yet fully adopted. And that's an important consideration because in this case, for example, in the European Union, we're following, of course, very closely the regulatory developments there. And what we saw is that, the regulation that was enacted in 2019, that was really looking at, targets for cars and vans really to move fully electric in terms of sales by 2035. Those remain in place because part of this automotive package that is being proposed has not yet been fully adopted. This means actually that in our CPS, in our current policy scenario, we are taking into account that kind of previous legislation, which is fully adopted at the moment. And that's where we reach this kind of 100% sales share in terms of electric, while in our stated policy scenario, we are considering strictly this 90% of, let's say, electric share by 2035. Maybe just to mention as well, because there's different elements, of course, that go into the proposed legislation, one being this flexibility measure for which manufacturers can offset part of their emissions, for example, by using what is called low carbon steel. In the report, we've also made an analysis to understand how much this mechanism that is proposed could be triggering in terms of additional demand for that low carbon steel. And we've estimated in our interpretation, that this could trigger between 7 and 17 of the projected steel production in the region, in the European Union, in terms of low carbon steel. Of course, there's still quite few elements to be defined within the mechanism, starting with the actual definition of low carbon steel, but that's an important consideration. And it's also noteworthy that when we look at the announced projects to produce that type of low carbon steel in the region, we see that the pipeline would be enough to deliver that type of production level. But of course, what we are really seeing is a bit of a lower level when it comes to offtake agreements being confirmed or being finalized between OEMs on the automotive industry and those steel producers. So again, something that we're following very closely, of course, throughout the year as well, to see how, again, the discussions on the proposed package evolve, so that we can, of course, adapt as needed in our scenarios. Thank you.
Thanks, Araceli. That's very helpful context. And Elizabeth, I would like to go to you now because we had quite a few questions about charging infrastructure and how that has developed over the past year and what your data tells us about trends.
Great. Yeah, thanks, Julia. And this is a really important point that we didn't have enough time to really get into too much in the presentation, so I appreciate the opportunity to talk about it a little bit more. EV charging is obviously essential for EV deployment, and I think in particular we look at the importance of public charging for helping potential EV buyers feel comfortable with the idea of an EV, especially if they don't have access to a home charger. And so we, in the report, track public charging developments, and what we saw in 2025 is that the stock of public light-duty vehicle chargers increased 33%. And so when we talk about EV charging and kind of sufficiency of EV charging, there are a couple ways we look at it. We look at how many charging points there are available per EVs on the road. And we also look at what is the capacity or kind of the total availability of charging power available per EV. And so looking at how many EVs per charging point we saw kind of a steady, it held steady. So that means that the charging deployment kept up with the EV stock increase. And so today there's around 10 EVs globally for every public charging point. But what we also saw is that the speed of the public EV chargers has continued to grow over time. And so then what we see is that the capacity available per EV has also grown. This is driven to some extent by increases in the charging speeds and powers in China in particular, but we're also seeing increases in most regions of the world. And so, what I think that means is that governments and industry are doing a really good job in terms of building out the needed infrastructure to support today's EVs and growing EV demand in the future. In our report, we also look at, what we think would be needed to meet the kind of EV sales shares that we have projected. And so what we see is that we will need public charging infrastructure, of course, to continue to grow strongly to be able to support the growing EV stock. And I think by 2035, we see that the public stock will need to increase around sixfold. But I think we've seen good signs that the governments have been able and industry have been able to kind of meet this pace of rollout in previous years. So we think that won't be a limiting factor necessarily for most countries.
Thank you so much, Elizabeth. Unfortunately, that is all the time we have for questions today, but I do want to make sure that, first I should thank all of our great panelists for all of the information they shared today, and to all of you for your interest in our work. And I want to make sure I direct everyone to the wealth of resources that we have available online if you want to go deeper. So we have the full report that is, again, available for free to download. And we've also updated 2 of our online tools. We have our Global EV Data Explorer and our Global EV Policy Explorer. And you can use these interactive tools to go deeper on EV statistics, projections, and policy measures worldwide. We also have 2 technical webinars next week for those who are interested in going even deeper into the data. And I should also mention that the team will continue to look at the situation as it evolves throughout the year, and we'll be publishing updates as it becomes available, and we'll continue to closely monitor electric mobility for the latest developments. So with that, thank you so much for taking the time to tune in. Have a great day, and we'll see you next time.